So a few months back, Mahesh and Mark let me know that, hey, we're going to have 4.0 launching. And I was like, cool. What's going to be different with 4.0? And he's like, well, we're going to have new this, new that, new this, new that. And one of the things is new signals. I'm like, oh, sweet. Okay. And Mark was so excited. Mark was like, these are the best signals we've ever put out, Chris. And I'm like, whoa, really? Cool. Let me take a look at it. So they got it loaded up in our dev portal. And so I'm in dev portal and I'm going through all of the buys and sells. And I don't know if you guys remember, but I made so much money in May. It was amazing. It was like I feel like it was over 30% in my account within the span of 5 days. It was the best 5-day trading streak I've ever been on. But those trades were not there in dev. And I'm like, Mahesh, we got a problem here. Those trades that I made unbelievable bucks on, Vuku dollars, as my mom would say. Vuku bucks is what she would say, actually, not dollars. Vuku bucks. They're not there. And I was like, these 4.0 signals are not going to be all that great. So then I was like, listen, Mahesh, here's the deal. If I missed out on these trades, I'm going to be super pissed. And so I was like, what if we have like 2 different signals? This was my idea. Like, what if we have 2 different signals? What if we have an active signal that's a lot more frequent and a swing signal, which is your original 4.0 signals that are unaltered, and we could nest the active signals within the swing signals. So whenever there's a buy on the swing signals, maybe you could get 2 or 3 active signals along the way. And Mahesh and Mark didn't like the idea. And I'm like, listen, this gives our customers more opportunities to trade. More trading opportunities means more dollars for you, right? And so Mahesh was like, all right, cool. Let me get to work. I'll come back. So Mahesh went to work and comes back a couple weeks later. And he's like, okay, here we go. We've got active signals. You flip a switch. Now you got swing signals. And I'm like, this is awesome. And then Mark was like, I don't even know why we're doing these active signals. They're not that great. They're nothing compared to the swing signals. Chris, they are so much worse than swing signals. Like it just shouldn't even be something you'd look at. And I'm like, but then there's more of them. It'll make up for it. I mean, we're talking like 10 times more signals. And I was a happy boy because I'm like, got more signals. This is going to be way more better. I'm excited. And so then, we came across Scott. We launched 4.0. And I was like, Mark, Mahesh, listen, I want to work with Scott. I want to make sure that we have the very most profitable trading plan possible. And I started with the active signals because I figured, you know what? More trades is more better. Let's do this, right? Scott helped me increase the expectancy. I believe at one point we were pushing 2.0%. We made some changes to bring down that expectancy, but it increased overall win rates. A little bit of a balance there that we worked on. And it looks great. And so we worked on it, finalized the plan. I said, this is plan A. And we've been talking about plan A. And then I was like, all right, let's work on plan M. Plan M was Scott's name. I love that. He said, let's call it plan M for money. I'm like, okay, cool. Scott gets the first set of data. The first set of data with absolutely no modifications, just the buy, just the sell signal in OVTLYR. And it was already 250% better. Just the buy, just the sell, and it was already 250% better than everything we just spent, countless hours backtesting, refining, improving upon. And it's like, what? Scott sent it over to me with some gifts or whatever, and he's like, this is unbelievable. I'm like, this is unbelievable. I may have messed up. So we're going through, and pretty much the same entry criterias on plan A will apply to plan M. There may be something slightly different here and there, but at least 90%, if not 100% of it is exactly the same. And then we started tweaking with the exits. And this is where Chris is going to struggle a little bit, because some of the exits don't happen when it closes under the 10. don't happen when it closes under the 20. And don't happen when it closes under the 50. And listen, that hurts me all the way in my soul. However, the sell signal hadn't come yet. Waiting for the sell signal. That's the exit. Having one stop loss, a 2 ATR stop loss, just like the turtle traders would have, that's the exit. And Darvian saw the screenshot from earlier. Mark was right again. Mark was absolutely right. Mark was right. Yes. I love smart people. I don't know if you know that. Mark is absolutely, without a doubt, hands down, the smartest person I know. Boy, was he right. Holy M, was he right. Holy M for Mark. Hashtag Mark was right again. That should be a thing. That should be a thing. And a couple things that we just tested even this morning. Funny you brought that up, Albertone, was the 200-day moving average. Mark and I had discussions on this years ago, and Mark was like, our signals work best under the 200-day moving average. I'm like, what? Yeah, before the big move has already started. Or I'm sorry, before the 200-day usually comes after the big move has already started. And it's like, yeah, man, like once you hit the 200-day, you're way behind. It's like, okay. So I worked on years of looking at that, validating that. And that's why you haven't ever heard me talk about the 200-day. Scott not only is amazing at everything he does, but he proved that our signals actually work best when the price is under the 200-day. It was crazy. It was crazy. So, I don't have a list of entries and exits to give you today, but I will tell you the exits are way cleaner. I think there's like 4, maybe 5 things total, maybe even less than that. One's order blocks. One is 2 ATR stop loss. One is the sell signal. And I think the other one is that if the 10 and 20 cross down. Like it's so much simpler, so much easier, and unbelievably more profitable. And that's before leverage. And that's before leverage. And let's give some context here. I can show some screenshots. So I went ahead and I pulled these. This is plan M for July and plan A for July. Now they're not the same trades, but they were everything available in July. Okay. Plan A, you can pause this and check it out if you want. Plan M. The July returns for plan M was 265 basis points. Plan A was 125. That's 202% higher. 202% higher in 1 month. 1 month. 202% higher. Now, this isn't every trade, by the way. This is only taking those that are in the top 10 sorted by percent return and outlier. So there's actually tons more that we aren't even looking at. Now, to rub salt in the wound about how right Mark was and how wrong Chris was. By the way, Chris's system, Chris's plan A that Scott and I worked on, amazing. This is like going to the grocery store and you're like, man, I love Coke. But Coke Zero tastes really good too. And it has no calories. Wait a minute. They have cherry Coke Zero? They're all great choices. But one of them is way more greater. Way more greater. Cherry Coke Zero, of course. Cherry Coke Zero is the plan M. So let's take a look at this. So this is plan M. Here's what I'm going to do. I'm going to do right-hand side and left-hand side. Plan A is on the left. Plan M is on the right. And let me see if I can zoom in, make this a little bit easier to read. I don't think that made that easier to read, actually. I think it made it harder to read. Okay, hopefully you can read this. Plan M on the right, plan A on the left. Plan A's minimum. Now, this is with percentages. I used whole dollars earlier. Some people didn't like that, so I changed it to percentages. Average percent, starting with $0. The minimum on Plan M is $52,000. Now, I like to look at the worst case scenario. That's just my opinion. Look at the worst case scenario, and if you're doing well in the worst case scenario, then you're doing great. I like to say if you're if you have a if you're wildly profitable in the worst case scenario, then you're totally great. Hey, you know what? Maybe that's why I have hair loss. Maybe it's the Coke Zero. In Plan A, it's negative 9,000. So that's not off to a great start. Plan M, 52,000 in the worst case scenario. Plan A, 9,000. Oh, but wait, you haven't seen anything yet. Hold my beer. The average return, $3.7 million on Plan M, starting at zero? No, starting at 100,000. Okay. I got ahead of myself. $3.7 million versus 191,000. Yes. But then it gets even better. Best case scenario, which highly unlikely, 64 million versus 2 million. That's only 32 times higher. So you tell me, if you had the choice between Plan A and Plan M, which one would you go for? Go ahead and type it in the chat. Go ahead and type it in the chat. I love the Monte Carlo simulators because of this exact reason. You've got two great things in front of you. Which one are you going to pick? Plan M. M, 3M. Yeah. Plan Batman. I like it. Plan M for Masters of the Universe money. Yes, exactly. It's not even close. Only 32 times more. I know, right? Plan M all day, every day. That was a good one, Steven. All day, every day. Plan M. Plan money. Not Plan 7. That's a deep cut, Steve. I appreciate that. So, Plan M is default. We're not even touching Plan A. Plan A exists, by all means. Trade with it. It is a very profitable plan, but it doesn't hold a candle to Plan M. Doesn't hold a candle to Plan M. Gabor Pop wants to say, okay, well, what if we had 30K? Well, that's okay. Let's do it. 30,000. Run. 30,000. Run. Average return, 5.9 million. Or 589,000. My bad. Average return, 11 million. This is crazy talk. 30,000? No, I think I had one extra zero. No, 30,000. Right? 30 with 3 zeros behind it. Yeah. Okay, run. Now, keep in mind, every time you run this, it will be a different result. That is intentional. That is how Monte Carlo works. But point is, this one is unbelievably more profitable than this one. And that's before we add leverage. That's before we add leverage. That's before we add leverage. So Chris is one very excited boy. But keep in mind, there are losses in this. This is not a holy grail. This is not a you win everything type of situation here. That's why we will still position size. That's why we will still make sure that we follow our exit plan, not just hold and hope and pray. One thing I did ask Scott to check on, and I'm going to meet with Scott after this, is how many days past the entry signal can we look at? How many second chance days can we take, basically? For example, Robinhood got the buy signal. Now, I was interested in Robinhood because that's one of the biggest wins I had. It was early in May. Robinhood got the buy signal, but it was on April 25th using the swing signals here. But it didn't fall into the data that Scott presented to me. And I think the reason being was because the donkey channels weren't set up on that date. Oh, you really can't see that. Let me scoot this over a little bit. The donkey channels were not set up on that date. However, they were the next day. And the next day, obviously, would have been an amazing entry if you're going up this far, right? From 49 to 73. I can get in a day later. I can get in a day later. That's what we're talking about here. So Scott's going to run some more data to see how far back we can take signals. I mean, I don't know, because some of these are so long that it's like, doesn't matter when you get in, it's going up. NVIDIA is also another great example. This is a little bit more than somebody would expect for 82 cents a day, right? What, losses? I know, right? So Plan M is using swing signals. Doug, good to see you, my friend. Congratulations on the golf outing there. Plan M is using swing signals. Plan A is using active signals. Let's go over here. So this NVIDIA, right? This buy signal in June 30th. Really doesn't matter if you get in July 4th, July 5th. No, I know July 4th is an exaggeration. July 7th, July 9th, because we're still going up. You know what I mean? So I want to see, and we are not holding through earnings. Great question. This is exiting before earnings. Exiting the day of or the day before the earnings date happens. It's crazy. No, it will always be known as Plan M. Always known as Plan M. Swing. Always known as Plan M, because this is Plan Masters of the Universe money. This is how Chris is going to win the US Investing Championship, and we're all going to do it together. Here's the deal. All right. I take this is my life, right? Your life may be plumbing. It may be all kinds of different things, right? And there is no judgment from me to you, not at all. We all need to do our part in the economy. This is what I was put on earth to do. Hands down, full stop. When I fell out of Susan Ewell, God sprinkled magic trader dust upon me. This is what I was meant to do. During the process, Chris went through lots of waves of, I'm just going to do this and make as much money as possible and screw everybody else, right? Very selfish mentality. But then, through the magic of the internet, a lot changed in my life. One of those changes was getting the phone call from Mark and Mahesh. God, what year was that? 2019, maybe? But they're like, hey, we want to work with you. I'm like, I don't know these guys. But boy, am I glad that I took that phone call. Because now I get to work on a trading plan that I can share with you. That's where I'm going on it. That's where I'm going with this. If I can make Masters of the Universe money, and I can show you step by step by step exactly what I'm doing, and I can't promise anything, but if I can make Masters of the Universe money, and I show you step by step by step, what do you think will happen? And thank the heavens that Scott fell out of Mrs. Raff. Exactly. The more money that I can make in a trading plan, the more that I can coach you on how to do the same. And having a conversation with Mahesh today, a Masters of the Universe fund will be happening. I just don't know when. Years from now. But that is part of why we are starting the Outlier Fund that I will trade live in front of everybody with position sizing and everything using Plan M, because one of the things we're going to do is establish and use that account as our track record account. So when we say, hey, we're opening a fund, we have 5 years of track record, and every single one of those trades was shown on YouTube. It's going to be great. It's going to be great. Now, a couple of quick notes from my conversation with Mahesh. Put on your calendars between October 9th and 10th. We're going to add a few more stocks to OVTLYR. We cover 2,600 stocks right now. 2,600 of the most liquid stocks right now. And Mahesh said we're going to add a couple more. We're only going to add 2,000 more stocks. October 9th or 10th. 2,000 more stocks with OVTLYR buy and sell signals will be live. We're going to add 5,000 to 6,000 total in this upgrade, but about 2,000 of them will get all the buy and sell signal. The other 3,000 to 4,000 will have some data, and we will start populating those with more and more buy signals once we get enough data. That's going to be awesome. I know, right? I know, right? Holy Batman. Exactly. Yes, please give me 2,000 more stocks. And VAC Labs market breadth widget that we've been using for a while will become the default market breadth screen. Mahesh is very excited about that. Now, we may have some differences between what VAC Lab is doing, what we're going to show, but dude made it so simple and so easy to use that I'm so incredibly grateful that he did and shared that code for free. VAC Lab, you are a rock star. And now we are going to build our market breadth to be in a very similar fashion. So that's my updates for the day. The Fed cut rates. Who would have thought? I'm only telling you that for weeks at this point. So yeah, I'm ultra stoked. I couldn't sleep last night. I was so excited. Now, of course, we need to let the market tell us when it's time to trade. Mahesh even asked me today, he's like, hey, Chris, I know you got your plan M. When are you going to start trading it? I'm like, well, first I got to let the market tell me when it starts. And he's like, I know. But like, when's it going to be ready? And I'm like, pretty much ready now. He's like, well, are you going to trade it? I need the market to work with me. He's like, okay, fine. So I'm very excited. I'm very thrilled. It's too bad Joe's not here. Because this is going to change my life. This is going to change your life. This is going to change all the OVTLYR, all the current and future OVTLYR's lives. And your job is to make sure that you are also making Masters of the Universe money, which I can't promise you, right? There's no guarantees. But if you follow what I'm doing step by step, logically, something great should happen. Something great should happen. So I'm sure there are some questions. I haven't been watching the chat all that much. Go ahead and drop your questions again. I'll answer a few of those. And then I'm meeting with Scott immediately after this to talk about Plan ETF, which we haven't even got that ready yet. Plan ETF is going to be a way for us to, rather than sit in cash, rather than sit in cash, let me see if I can be fancy and throw this over my shoulder here. Well, rather than sit in cash, as I totally botched this, I know I will. Oh, that worked. Let me try it again. Okay, let me do it for effect. Rather than sit in cash, here we go. I love doing these live. Rather than sit in cash, how about we sit in ETFs that could potentially make a lot more than just sitting in SGov. So let me roll through the questions here. Pants or no pants? Of course, never pants. Never, ever pants. I really hope it changes your life as well, my friend. Nate says, I need more money, please. Me too. Is Mary Mark in the market right now? What trades is he in? Maybe that's Mark Minervini. I'm not sure. Mark, I don't know. I don't keep up with his trades. And our Mark is handling some personal issues, so he's not going to be around for a minute. Exactly. People aren't going to listen until they see the profits, which not only will they see the profits, they'll see the entries, they'll see the exits, they'll see the position sizing, they'll see everything, top to bottom, inside out, backwards and forwards, upside down. So I don't think there should be any skepticism by the time we get done with this. I'm blessed to have found you, Ozzy Ian. Blessed to have found you, my friend. 21-day expirations is still on the table. The average trade duration, I believe, is 21, 22 days, which we're going to start with the 21-day expiration. If we need to roll out, that's fine. We can do that. No problem. What is the difference between swing and active signals? Well, if you remember at the beginning of this video here, swing signals were the amazing brainchild of Mark and Mahesh. And I said, that's not enough signals. Chris wants more signals. So the difference is one of those was made by geniuses. The other one was made by a random guy on the internet. I don't have a drawdown comparison right now, Brandon. Good question though. Michael Ross. So we'll use -2 on the ATR for entry, but not for trailing stop. Now, this was something, and this is why I said I don't have a plan to show you just yet, because this one hurts me. No trailing stops. I know. Trust me, I know. How about not rolling, but let the option run? Absolutely could. You don't have to roll, but when you roll, you take partial profits off the table. You can then use that capital to take new trades, and it reduces risk in the original trade. And we saw in VKTX, right? Even a stock that got absolutely monkey hammered and it super sucked and part of the game, unfortunately. I was still up. Well, I wasn't up. Rather than being 100% down on that option, because it did expire worthless, I was only down 60%. Now, granted, neither one of those are great, but I sure would rather be down 60% versus down 90% or greater on a single option. Unfortunately, sometimes that's how it rolls, and that's why we position size. And also, position sizing will be measured the distance from current price to the 2 ATR. So position sizes are going to be way smaller, way smaller. Is the only change between plan A and M the signal you use? I don't remember off the top of my head the difference in entries. In entries, yes, for sure. But I feel like there's something else as well. I just can't remember at the moment. Exits, totally different. Totally different. You're welcome, Mr. Workout. We will not be doing cover calls, ETFs. I almost barfed when you posted that, my friend. When does M go live? I will absolutely walk you through it. I want to work with Scott to confirm how many days back instead of T, like today, and T-1, which is yesterday. That's fancy lingo. T-1. How many T-minuses we can go back and still have really strong signals. Of course, I'll give you everything you need. Don't you stress about that. Finally, too late. Powell cuts rates. Let's see. So this was what I presented to Scott, and man, I tell you, Rick, good to see Rick, by the way. That one hurt me. That hurt my feelings, because I was like, Scott, I think that this will really help with the results. So Scott ran the trailing ATR stop. He ran exactly that, Rick, with a 2 ATR trailing ATR stop, and it made things worse, like bigly worse. I was like, damn it, because I really wanted that to help. No, implied volatility is not a factor for me. Let's see. Cherry Pepsi Max, at least the diet version, I don't know what that's called, is actually really, really good. I agree with that. I agree. Deep Thought says, no, they're both gross. So option roll-up rules will still say the same. As far as liquidity, yes. But exits, we're not changing the exits. The exits are going to be locked, and we're not changing them. And to think, I almost let my algo skip over this random guy in the end. Dude, here's the deal, right? I've only been doing this for 16 years. I've only made 2,400 videos. It's a real shame that more people have not heard about Outlier, because we're about to change lives like nobody's business. Like nobody's business. And I'm ultra stoked about that. You can help though. I mean, you can hit the like button. There's a new hype button down there on the replays. You can hit the hype button. You can share this with people that you love. Don't share with people you hate. Screw those guys. We don't want them to make Masters of the Universe funny. But yeah. Listen, I'm telling you, this is why I'm struggling with Plan M. Because there are times, and I mentioned this earlier, that prices are going to close under the 10 EMA we're going to hold. Prices are going to close under the 20 EMA we're going to hold. Prices are going to close under the 50 EMA we're going to hold. And I'm going to be losing hair and sleep in the meantime. I'm telling you. But the data proves it out. And I have many examples where I actually went through and I'm like, what? Let me see if I can find one real quick. So there is one of the Plan M buy signals. Obviously would have got out before earnings. Another Plan M running up into order block, so that would have gotten us out. Hang on, I'm trying to find one where it pulls back yet continues up higher. Here, XYZ, the signal on July 1st, which you can find in the platform as well. Closed under the 10, closed under the 20. Came back up, closed under the 10, closed under the 20. Came back up. Sell signal happened here, Friday, August 1st. An 8.5% gain versus a 4.5% loss. Plan A, and hear me out, Plan A took the same trade and had a 4.5% loss. Plan M took the same trade and had a 8.5% gain. Let's see if I can find another one. Logi, or not Logi, STX. Plan A took a 2% loss on this close under the 10 EMA. Plan M took a 5.64% gain. I'm gonna find another one real quick. Clearly, Chris has been doing a lot of work, by the way. Oh, gotta move backward. Here's one. UNFI, UNFI. And this is in the platform right now. A May 1st buy signal closed under the 50. And then ended up being a 17% gain. Where Plan A would have had a loss of 2.45%. So listen, I understand that this will violate some of my principles. I agree with this. I agree wholeheartedly with this. Another reason why we're sizing down. Sizing down. So I'm very stoked. I'm ultra, mega, super duper stoked. So that's going to be the video today. I'm not going to do anything else. Fed cut rates, woo, big deal. We have been saying they're going to cut rates for a minute, right? Just use the CME Fed Watch tool. So I'm going to go meet with Scott, and we're going to continue working on refinements to Plan M, seeing how many days back we can go, and then Plan ETF and where that leads us next. So listen, BE, hang on, Paul, thank you, Paul. I remember looking at BE and I was like, oh, what the? Where is that signal on BE? Yes. Where's it at? Here. Oh my gosh, yes. Paul, great point. This, but I tell you what, as a trader, you need to listen to what the market's telling you, okay? as a trader, we got some data. One of the data we got where my exit signals were far too tight. Far too tight. Perfect example right here. A close under the prior day's low was one of my exit signals before. Took a small loss here. That stock has basically doubled. And I can guarantee, I'm pretty sure this sell signal has not been hit. Alan says BE has been huge for him. Art, Senior Wahoo, is still holding it. Okay, BE buy signal came on August 14th. So let's see. Oh, you know what? Different signals now. That was a 3.0 signal. So August 27th, and then again on September 4th would have been the exit right there. So a little bit different from 3 to 4, but to Paul's point, yeah, this would have been a small loss that you could have seen into a giant win. So listen, if you're ready to save time, make money, and start winning with less risks, click one of these 2 videos. I'm going to go meet with Scott. We're going to go change the world. Have a fantastic day. We'll definitely be talking soon.